what happened on Thursday for us as long-term investors was good news, right? Because what happened on Thursday, it gave us an opportunity to be able to buy stocks that we're interested in, right? Gave us an opportunity to buy stocks that we're interested in for a cheaper price, which brings me into another term. I was thinking about what TJ said last week, and so I want to try to share terminology as often as we can. Oh, wait a minute, Ronnie got a haircut. Ooh, they open up the doors and
I'm set now, man. I'm set.
get out of here.
God is good. God is good.
All right, brother. Look good. Sharp fade too.
Say Ronnie got a haircut.
Man, you can't mess with this right here, man.
No.
I might keep this for a while.
Liking the fro gang for a minute, but
Now juices and berries, man.
Juices and berries.
So I want to try to share this terminology of dollar cost averaging. Is there anybody that does not know what dollar cost averaging is? Good, perfect. That's what I wanted. So Thursday was an opportunity for dollar cost averaging. So what does that mean? This week, any of you buy stocks this week but didn't buy on Thursday?
I bought on Thursday.
Okay, you bought on Thursday. Anybody buy something? Mia, you bought something this week. You didn't buy it on Thursday.
I think I did
I
too.
was on Wednesday, I think.
I think mine was Wednesday or Tuesday.
You bought Disney on Wednesday, right, Mia? What'd you do? What'd you buy, Kendall?
I got Apple. I think I got Apple.
Okay.
Apple.
Wednesday. All right. So you bought Apple. Mia bought Disney on Wednesday, right? You bought it because you had done the fundamental analysis. You were like, I like this company.
Yeah.
I'm buying it, right? So Apple, I don't know what you paid for it. If you want to look it up, you can. But, well, let's do it. Let's do it so we do this all the way.
Before you do that, I don't have a lot of money, but I had a little bit to spend. It's pretty expensive. I'll tell you that.
I was about to ask.
Hacking skills.
It's pretty expensive.
I know.
Okay.
We're in there now, man. That's all that counts.
We're
Yeah.
open. We're open book, so it's all good.
Yeah, no doubt.
So
Kendall, can I still borrow $1, brother, please?
Hey, man, I got you, brother. I got you.
Thank you, brother. Jack Frost, appreciate you.
all right, so Yahoo will give me the historical prices. All right, so check this out. So this is the example of dollar cost averaging right here, right? So now, what was Wednesday? Was
The 10th?
Wednesday was the 10th.
Wednesday was the 10th.
All right, so on Wednesday, well, Apple's are not a really good example, but on Wednesday, Apple's not a good example because they're such a good company. This
Look at the lows. Look at the lows, man.
Yeah, I got it on Tuesday because it was 332.
You said you got it on Tuesday?
Yeah, I got it on Tuesday. Yep.
This example does not work for what
I bought some Bank of America like Monday.
And I got Bank of America too, yeah. Yep.
Okay. Let's try that. I think that's not BA. It's
These boys balling out of control over here.
Nah, man.
that was $18. That was cheap. I do the bargain shares.
so here we go. This should help me to be able to explain dollar cost averaging. All right. So on
there you go.
Wednesday, all right, so this is perfect. So Wednesday, let's just say you bought at the lowest price on Wednesday, right? Which was $26.51, right? You bought 100 shares. You're feeling good about yourself. I got it at $26.51. I looked at my dividend yield. I'm winning. Yeah, right? Next day, which was the Thursday, it dropped down to $23.68. You just lost $3 a share. You just lost $300 in a day. And now you're mad.
Tragedy.
Or tragedy, right? But here's the thing. if you have money in your account, like we talked about earlier, if you have money in your account for Black Friday sales or doorbusters, like Thursday was, right? Then you would have, instead of, if you had done your fundamental analysis on Bank of America and you liked them, regardless, and they were already in your portfolio and you really liked them, instead of being mad about what happened on the day before, you paying $3 more for it, what you would have done is you would have gone back and hypothetically, just to make the math easy, gone back and bought another 100 shares for $23.68. Now, what would have happened is instead of that stock having cost you, well, we're going to make it even easier. Instead of that stock having cost you $26.51, it's now going to cost you $24.50 because of the average of the two, right? So you can use dollar cost averaging to lower the average cost of what you bought, right? So if you bought on a really bad day, right, you're like, all right, you got me. All right. When that next day comes, maybe next week, next month, next year, whatever, you catch it at that lower price and you can bring your cost, you know what I'm saying? You bring your cost down. And that's what the dollar cost averaging is. You're bringing your cost down, right? Conversely, I bought Facebook at 186, but I love Facebook. So when I had a chance, I bought some more and it lifted my dollar cost averages up because I paid more for it the next time and more for it the next time, right? But I had caught it at such a good price to begin with, I wasn't really mad at having done that, right? But essentially, the dollar cost average is when you're buying them at different times, the average cost of those stocks is going to change, and ideally, you want to try to chop it down. So whatever you bought on Monday, Tuesday, Wednesday, if you still had, which is sometimes the argument for not spending all your money unless you looked at that dividend yield and you feel really good about it, right? Then go for it, right? But other than that, you can always have an opportunity to kind of dollar cost average and knock that price down, right? That makes sense? Any questions about that?
Nope.
All right, perfect. So Thursday was crazy, but we don't care because again, we're not day traders, right? We're not day trading. We are investors for the long term. Some of us are day trading, but the conversation that we're having is about investing, right? But you can do both, but this is what we talk about, right? It's what we talk about. So so Thursday was crazy, but we're all good with that. Right before I get into the REITs and the homework that I know everybody did and I'm excited about, let's do some quick introductions because everybody's got to go through their hazing period. Alex, that means you. So even though we don't see your face and we see you in deep thought, please share with us why you're here. What is your, on a scale of 1 to, what do we say, 1 to 5? 1 to 5?
1 to 10.
1 to 10, on a scale of 1 to 10, your stock knowledge and what you're hoping to get out of these meetings.
Got you. Good evening. First off, appreciate y'all for having me. Alex Smith Johnson. Why am I here? I heard that Big Brother Mandela had a group going on in which he was kicking knowledge. Anytime there's knowledge to be had, I'm trying to learn. To be honest, how would I rate my stock knowledge? I'm about a cool 3, ice cold 3 right now, but I'm in it. I'm learning that. Be honest with you. When I got into it, I just literally jumped in. I kept talking about it. Finally, I got a couple of hundred together, and I just jumped into the water, no knowledge. And I've been kind of learning as I'm going. I haven't taken a loss yet, but I know this isn't the way to keep doing it. So that's what I'm trying to do is just gain that knowledge so that now I actually know what I'm doing. There's some science reason
Yeah.
behind my moves. It's not just quick come ups and I'm lucky because it just happened to work out.
That's perfect. That's literally what we talked about in the very first week. Was we got to learn how to not be on the quick come up and just be lucky, and really think about like what are we doing and how are we doing it strategically, right? And so that's literally what we talk about every single week. So I'll warn you ahead of time that that today might seem really fast, but every week is going to get a little bit slower for you. And just really quick, I'll have Mo share because Mo was here last week, and that was his first week. So Mo, if you would share like how last week went for you. Did it go, was it fast, too slow, or you felt like you kind of understood what was going on, or just share a little bit?
Overall, I guess I would say that the support was there for like if there was something I didn't understand, that I was able to ask a question and get the answer that I sought. And that was pretty much just the gist of it.
Yeah.
It moved at a decent pace, but with the ability to kind of ask questions and get a little backstory, it kind of helped bring it full circle for me.
Yeah. So Alex, I'll tell you this: pretty much every week thus far, we've done some fundamental analysis on something, and I think that's going to be at the heart of what we do to just get better at it and practice at it, and then more importantly, just eventually we'll get to a point where we're a stock club, right? And we can really just start sharing stocks with one another and give investment ideas to each other. But first, we got to just kind of get on the same page of how we look at stocks and how we analyze those stocks. So you just keep on coming every week, and you're going to get better and better and better at it. Some brothers have, when they first started, Brian being a perfect example, Kendall being a perfect example, right? Of folks who are like, man, I don't know, but I'm here to learn. And I think last week, I jumped into one of the breakout rooms, which we're getting ready to go into in a minute. But I jumped into one of the breakout rooms, and I was listening to Brian kicking knowledge like he knew what he was doing. He sounded legit, right? And that only came after a couple weeks. So welcome. I'm glad you're here for sure. And I have faith in your ability to be able to catch up really fast. So
Thank y'all, man. Appreciate it. Yes, sir.
sure. So and I'll tell you a little secret too, that very few people know. It is my hope that these conversations that we're having over here about investing in stock, we eventually pour into the work that you've been doing with the EPI union, right? Because if we're really looking at trying to like solidify ourselves, the idea of like us working together to be able to build up equity through stock investing is going to be huge, right? So I mean that's long term. It's a long-term dream and vision, but what you started with the EPI union is directly aligned to what we're talking about over here, and I'm waiting for those two superpowers to meet at some point. We maybe a year or two from now, but I'm waiting for those to meet. So that's my own personal long-term hope and goal. Just an FYI.
I'm with you, big bro. Let's do it. Yes, sir. I'm on board.
There you go. All right. Homework. Who did it? Who didn't? We're about to find out. So we're going to do some cold calling today. I'm going to send you into a breakout room in a minute. You guys are going to analyze some REITs together, which I'm super excited about. But before we get to that, who am I going to call on? Who look like they ain't did their homework? I can see it in your eyes. I see Brian's over in the dark trying to hide his eyes. So he might be someone who didn't do his homework. He's like, I'm turning my lights off today. But Kendall, we're gonna start with you. What did you learn about REITs?
Yeah, so I looked at it. So REITs, real estate investment trusts. Basically, what I found out was that these real estate companies, when they collect their rent or lease money, they have to, by law, they have to divvy it out to their investors. They have to. So I stopped right there. I was like, well, if they got to do it, then I'm in. So I was looking up different REITs. I was interested in, and kind of went from there. I didn't buy any yet, but that's what I found out so far.
Yep. What you want to add to that, TJ?
I pretty much dove more into trying to understand exactly what they do. And from my understanding, they pretty much, for people, for the average common folk like myself that can't afford to just go buy an apartment building, you can come together with other people. For example, say like all of us came together and pieced up and bought this one apartment building. What REITs are, these are companies that pretty much allow that to happen. You have all these investors that'll get shares in this company. This company's duty is pretty much to, they're the one that go out and buy these properties and manage the properties and all that. Now you have different types of REITs. That's my daughter. You have these different type of REITs that specialize in different things. But what it comes down to is you have equity REITs and you have mortgage REITs. Equity REITs, that's the common one. They go out, they get these properties. They mainly make their money on, you know, the rent that's getting paid by these either if it's an apartment building, you got the tenants, or say like a commercial, real estate like a mall or something like that. They rent out the office spaces or these spaces and they pay rent on that. That's where their income is coming from, mainly. And then you have the mortgage REITs where they deal with the loans. They give out the mortgage loans and they make money off of the interest that they get back off of these loans. So that's pretty much a lot that I learned. And then I saw that there was pretty much 5 different types. You have your retails, you have your mortgages, and then you have ones that specialize in like in like apartment buildings, like residentials. But from what I understood, from what all of them meant, I boiled it down to right now, given the times, I think mortgage REITs is the way to go, like specifically right now. You don't want to really go to retail because, not many people is going to these stores right now. A lot of them are applying forbearance and stuff, so they're not making their payments, Mortgage, because the rates are low right now. So say you invest in the REITs that's giving out loans, they get it for, I don't know what the rate is, what the fair rate is right now. Say just it's at 0 right now. I think, or it's close to it, if I'm not mistaken. And then the normal mortgage loan is around 3.5% right now. So that 3.5%, that's your profit margin. So right now, I think mortgage loans or mortgage REITs are the way to go. So I took that and I started looking at different mortgage REITs, and just seeing which ones are the best. Starting to do some fundamental analysis on those.
Perfect. You got an A for effort and an A for work. You put in work this week. I'm proud of you. All right. I don't know if anybody else can add on, but I'm gonna go to you, Ronnie. Aside from real estate and mortgages or what have you, you know of any other types of REITs that are out there?
Not that I know of, but I just learned about the 90%, about law. They got to give up 90% of their profits to their shareholders, and it's kind of a cheaper way to get into real estate versus unless you got like 50,000 to put down on a crib and use it as a rental property or something.
Yeah, so it's got to be at least 75%, right? It's got to be at least 75% that they got to pay you back. So I'll add a few things because all that glitters ain't gold, but REITs are good, but they come with some things to think about, right? So number one, everything you guys said is 100% accurate. If you're interested in the housing market, you're interested in investing in homes and stuff like that, and you had a barrier to be able to get into it, this will prevent that barrier from happening, right? If you're like, I want to get into real estate, but I don't have $30,000 down payment. I don't have $400,000 in the bank to go drop on a commercial property, right? This is the way for you to be able to do that, is to do it through REITs. You can do it through REITs, right? So essentially, like, let's just say you had a house. And if you had a house that you were renting out, every month you're collecting rent, right? If you got a REIT, every month instead of collecting rent, you're collecting dividends, right? You're collecting dividends. Now, the downside, and I wouldn't really call it a downside, I would say more of this is something to think about, is we get taxed on our earnings, right? We get taxed on our earnings. So when you get taxed with a regular stock, there's a couple different options. If you hold the stock for a year and a day, I think the tax rate is like 15% or something like that if you hold it for a year and a day, right? And those are your earnings, not what you put in, but what you've earned, right? Whereas with REITs, a REITs will tax you based upon your effective tax rate. So depending upon where you're at and how much money you make, you're going to get taxed on your earnings from those REITs, from dividends that you're paying, that they're paying out. You're going to get taxed. And that's essentially a higher rate than it would be if you held it for a year and a day, right? Now, the way that some folks get around that is they'll buy their REITs inside of their 401ks, because those 401ks are tax deferred. Doesn't mean you're not going to pay taxes on it. You're just not going to pay taxes on it right now. Not going to pay it on it right now. So, so REITs are great, right? But that's just something that you just need to know from a tax perspective. Now, none of you, except for maybe Nate, are sitting around doing their own taxes, right? A lot of times folks are just going to go see a CPA or go see a tax professional or something like that. And so Charles Schwab or Robin Hood or whoever you're with, Fidelity, whoever, they're going to mail you your statements, 1099s and all those kind of things, right? And so your tax person will figure all that out. It's not like you have to really be keeping tabs on it, but it is something to consider, because let's just say that you're, it's possible, and I don't know I'm not the mathematician that can figure this out, but it's possible that you could be making money on your REITs, and if it's not doing as well as you would hope it'd be doing, then you could be paid, like all of your earnings could be getting eaten up, right, in taxes, right? So it's something to consider. It's just information for you to have, but it should not, stop you from being interested in REITs at all, right? So, so what I want to do, I want to send you guys to a breakout room. And let me tell you what you're going to do. I'm going to add on to the question I asked Ronnie. So REITs can be mortgage. We heard that. It can be real estate. It could be office buildings, right? It could be rentals of warehouses, right? So whoever Amazon is written from, right? That's probably part of some REIT somewhere, right? For the warehouses. But then there's industrial spaces, right? But then there's also a new thing with digital realty, right? Like, where is your digital space being held, right? So that too is something to think about. So what I'm going to do momentarily is I looked up a few REITs for you. I'm going to send you into a breakout room, and essentially I'm going to give you 4. At minimum, I want you to do research on 2. If you guys got more time, then do all 4. But at minimum, I want you to do research on 2. And I've only looked at a few of these. I literally just went to a website I can show you, but I just went to a website and typed in like some REITs, and it just spit out a couple different ones, right? So I haven't done fundamental analysis. I'm not telling you to choose this or choose that. But what I do want you to have the practice of are looking at these REITs that I've chosen for you and do some analysis on them. And keeping in mind, I don't know how it's going to separate, but we'll find out in a second. But keeping in mind, there'll be some folks in the room who may have never done it before, right? So it's going to take some leadership inside that room to be able to help and support those people. So when you guys are explaining or going through it, be very thorough in your explanation of why you think this company is good. So here's the things that I want you to do. Number one, do the fundamental analysis. And number two, understand what that REIT does. Because all the REITs that I'm giving you, they are not the same, right? Some of them are similar, but some of them are very different from one another. And what TJ did in his explanation was he did kind of the qualitative part of looking at stocks, right? When it comes to like, all right, I have an idea of what sector I want to go to based upon what I feel is happening, moving forward. So he's like, I like the mortgage REITs, right? And that didn't come from having done any fundamental analysis. That's just from like paying attention to what's happening in the world, right? But now that you've done that, now you got to do the fundamental analysis on mortgage REITs if you wanted to do that. So let me look and see how these breakup rooms are going to work. If I like the setup, how many? 1, 2, 3, 4. 1, 2, 3. 1, 2, 3, 4. So that's 12. Let's do 3 rooms. Let's do 3 rooms with 4 people in them. Let me see how I like this setup. I'm gonna change this one out. I'll move you to breakout room 3. And then yeah, I think this looks good. To breakout room 1. Okay. I think I like that. All right. So I'm gonna send you well, if you got a pencil and paper, you might be able to do this. But I'm gonna send you in the chat. Right now I'm just gonna send you to a room. But I'm gonna send you in the chat which ones you're gonna be looking at. So that you know which ones you're looking at. So I'm gonna send you to the rooms right now, and then in the chat, I'm gonna send you what rooms to look at or what REITs to look at. That first breakout room, I can't remember who was in it. I think that was Brian's room. Why don't you share with your share? So let me write this down so I don't miss what I'm saying. Share what did you do all 4?
Way we could do all 4, man. You really?
Some people did. Mia, did you guys do all 4?
Yeah,
You did all 4, Rob?
Yeah.
Okay, so share the 4. Share the 4 things that they do, not necessarily your analysis, but like what do they do?
Oh, well, one of them we just skipped over, kind of. So we didn't really look into what they did, so I can't answer for that one. But we had SITC, BXP, AMT, and VNQ. So SITC, I have no idea what they do. BXP, they specialize more in like office spaces.
Okay.
AMT is more like satellites. And VNQ, I can't remember off the top of my head right now.
All right. So who else?
VNQ was the one we had a little bit more difficulty with.
Who was in the room with you?
I had TJ, Brian, and who else I have in there?
Ronnie.
Right.
All right. TJ, so what was your guys' order?
Which one was the order?
Did you rank them?
Oh, we put AMT at number one. They look the best, but according to their dividend yield, this is not the time to buy them. The dividend yield is actually below the 4-year average right now.
Well, so what does that tell you?
That it's not the time to buy them. The price is a little more than what you want it to be.
So you had them at number one, right? What was it about the company that made them number one?
We looked at the fundamentals of it, and everything was trending upwards. From the 5-year, 10-year graph, it was going up. Their income was going up. Pretty much all of the indicators that you would typically look at in the fundamental analysis were trending upwards. So it looked like a good company. They're making money. Just now is not the time to buy them. You want to keep an eye on them, until they go on sale.
Their dividend history was going up. Their payout was going up.
You looked at that too.
Yeah.
What was their history for growth? You remember?
I think off the top of my head, it might have been 8-9 years, but I'm not sure right at the top of my head. But quick look says growth.
Ronnie's looking at that.
5 years.
5 years?
8 years. 8 years.
Yeah, okay. So one of the things that I thought was interesting was that this was you all's number one choice, and the dividend yield was not where you wanted it to be, right? And to me, that sounds like that would make sense, right? If this is something that you're really interested in, it also means that if the dividend yield is low, translation, people are buying it, and the stock prices continue to go up, right? It's going up and going up, which is why that dividend yield is low, right? So it sounds like, at least from, the little 2 seconds of hearing you guys share, that you must have chosen a good one, right? You must have chosen a good one because that dividend yield is so low, which means that something over this last 2 months that clearly has affected them, right?
Right.
And they just keep on moving. All right, so we got AMT at number one there. Nate, who was in your room? You're on mute.
We had Mo and Beezus.
Okay.
Big baby.
What did you guys look at?
We looked at peak. So we didn't rank all the other REITs or anything like that at all. We started with the one. I guess thinking we'd have a little more time, but we'll just kind of walk you through what we did with Peak, P-E-A-K-E.
All right. What do they do?
So they invest in life science buildings, which are basically buildings for people like Ronnie to go in and do, tests and instruments and things of that sort. So they build buildings for research folks. They also build buildings for senior citizens who are in communities when they retire. And then they also do buildings for outpatient care facilities for folks who are rehabbing and things of that sort. So those are the three industries in which they invest in terms of trying to acquire real estate.
All right. And Brad, what they look like?
Well, looking at the trends, give me 1 second. They aren't looking too good. The 5-year growth is in the negative. But I was talking about, we had the discussion right at the end, would this be a company that something I would take further analysis in? I think I would, just because it's something different. I'm trying to diversify my portfolio. But, give me 1 second. We looked at the dividend yield. I mean, we looked at everything. We didn't get to the earnings. So we were trying to look at how much money they had. It looked like they had been paying their bills, so which was good. Like, okay, looking at the assets or the liabilities, it looked like they had been, they made some money, but they paid some money out. So just trying to figure out, we didn't get a chance. We really went to the page and looked at the investors, who they were, So we really took the slow road on it, but
Went a deep dive on it.
yeah.
All right. So what did you get out of that, Mo?
What I took from it was that there was too much. There was a lot of fluctuation with the stock, varying from the operating income to the net income to the info on the balance sheet, to where what they do, it sounds like it filled a service that's needed and promising, but at this time I wasn't comfortable with, given their fluctuation and that the dividend yield was lower than their 4-year average. I wouldn't be comfortable with purchasing them right now, but they are worth keeping track of just to see how they perform in the future.
Okay.
An interesting thing too, is their dividend went down significantly from like 40-something cents, the high 40s to like 28 cents. So it'd been going down the last 5 years.
Okay. I don't like that.
No.
All right, James, what'd you guys look at?
We looked at DRE, which is Duke Realty Corporation. We actually looked at the first two a little bit more detail. The third one, we were working on that when the time ran out. And I think we didn't really do an official ranking, but I think we may have ranked them in the orders that we reviewed them. We saw some stuff in the Duke Realty Corporation, which owns rentable square footage for industrial properties. And then Welltower provides space and infrastructure for medical facilities. Pretty impressed with the amount of money or revenue that Welltower had. It was like over 20 billion over the last, 5 or so years consistently.
Yeah, really quick. I won't interrupt you, but really quick, what does Welltower do?
They provide infrastructure for medical facilities. So
is there a demographic that they work with?
Senior. Wait a minute, is that right?
Seniors, hospitals, office buildings, like acute memory spots, things like that.
Yeah, senior housing, post-acute care providers.
Yeah, so I already knew the answer to that question, but I asked you that because I think it's very similar to the one that Brad, you guys were just looking at.
Yep, Peak was.
This one's doing
a lot better.
Yeah.
Yeah. I was trying to get back to the page because I was responsible for going to the investor pages, so I'm just trying to review some of the things that we went over during our conversation. I think we were looking at the debt, but some of the stuff we were expecting because it was a real estate company, we were expecting that there was going to be some level of money that was going to be shown possibly in the negative because they were making investments in property.
Yeah, so we kind of like, we like DRE because it was much more consistent. Whereas had a lot more fluctuation in what they were doing. Much bigger company though.
Yeah.
They all had a slightly elevated dividend yield, or slightly negative. So the price was a little bit more elevated, which again could mean that they're actually making money. So the one we didn't get to in the middle of was Cone, which is a data center piece, and so that's when I was interested in looking at, because nowadays everybody needs a data center.
Yeah.
But yeah.
Kendall, what did you pick up from that?
Yeah, just to piggyback off what they said, I like the Duke Realty Company. Their dividend yield, they have 5-year growth on their dividends. It just seemed like a more of a consistent growth with their company as opposed to there's a lot of fluctuation. So, but they had some good good points is that they were making money. I mean, that's a huge corporation, $25 billion in revenue. I mean, so there's something there. Just probably need to take a look at it further, see if that's, and then the price of it was a little higher, for Well as opposed to Duke Realty. So, analyzing all that and then make a decision. That's,
Well,
if that was something.
one interesting kind of thing that stood out with Well for me was, we looked at it had 0 years of dividend growth, but it was basically 4 years of just a consistent dividend, which was actually higher than the other ones. So we look at the growth, but you also want to look and see kind of what that number actually is.
What was DRE's stock price?
They were like
35.
And then what was Wells' stock price?
50.
55.
Yeah, see, ours is at 28, and it was fluctuating between 30 to 40 throughout the last 10 years. No significant spikes, 1 or 2 significant spikes, but their dividends were consistently going down every single year the last 5 years.
Huh.
And their revenue was high, but it was going down as well, a couple billion a year.
Yeah, we had 5-year, 6-year growth on dividends. I mean, they were smaller. Like DRE was like 60 cents, or it was 94 cents for the year.
Right.
So it was kind of an interesting. Yeah, it was growing, but it was still relatively small in comparison.
But they like Brad said, or Ken said, they had been paying down all their debt. They had $10 billion for 1 year, and then the 5th year they're down like 4. So they were paying a significant amount of debt down, which is, I guess, what made their numbers fluctuate.
Maybe that's why they cut their dividends.
Yeah. Sounds like it.
So Alex, how was that process for you, and what did you pick up during the analysis process?
I mean, the process for me, the break room was definitely very beneficial. Just being in a group with James, Moody, and Godard and them. I focused on the DRE. I think that was the one that we had looked at, and I don't think we officially ranked, but I know brothers had some good points about that. Just using the Robinhood app, what I was able to do looking at Duke Energy, I concur with the brothers about when we looked at the 5-year analysis chart. I think a lot of brothers saw that there was like an uptrend. And while brothers was talking about that, I went down. I was looking at the 1 year and also the 1 month and the 3 months. And I noticed what intrigued me about Duke Realty, and I could be wrong, but I was looking at the 3 month, like they had a steady trend. They were going up. Obviously, in March, they took their hardest hit. I'm assuming with COVID. I'm still a novice, so I don't know. But I looked to see, like, after COVID, like, after the March, did they start that trend back up? And they did. So just my novice analysis, one thing I saw that I liked about Duke Realty is that it looks like, when you look at that chart for the 5 years and you see the steady trend, then you see them drop down in March and get hit by COVID. At least to me, it looks like they have enough to, get that trend back going up again and sustain themselves. So I thought that was cool. The stock price, 35 right now. I mean, I don't think that's bad. After doing a little bit research, if I was inclined, I would definitely get in at that price. That was kind of cool. But that was really what I got. I was, as Godard and James and Kendall was weighing in, I was more so just looking at the charts, trying to follow them and understand the trends and stuff.
Yeah, so that's real good work on your part. So one of the things that we do, the first thing we do when we're thinking about a stock, we always do the 5 year, so we can get and we just look for the trend on that 5 year, right? And the reason why we do that is we want to kind of get a sense overall of what it looks like, and that'll determine if we even want to go on to the next slide, right? If we even want to go on to the next one. If we see a downward trend, we on to the next, and we're not looking at anything else. And I think what you saw over the 3 months is probably going to be what everybody's chart is going to look like, because in March, everybody took a dive, and the market as a whole, up until Thursday,
corrected.
Until last Thursday, has been fantastic. It's been going up. Matter of fact, I think it hit some records in terms of like the 50 days. Like it's never the market hasn't recovered like that, maybe ever, right? And so I think no matter almost damn near, unless you're talking about Apple, Google, Netflix, Amazon, who've been killing it this entire time during COVID. A lot of folks are going to look like that. A lot of folks took that March 23rd like banger to the face, and they've been consistently going up ever since. Like almost every stock, right? So the thing with Duke that you saw, you would have seen that same thing in other places. And so what we do is we try not because we're looking at investing versus day trading, right? If we were day trading, the 1 month, the 2 days, 5 days, the 5 minute, all those things matter, right? You see Kadar shaking his head, and TJ is silently shaking his head. Those minutes matter, right? Every second of the minute matters when you're day trading. But when you're investing, which what we're talking about doing, we really need to see a broader snapshot, right? So we don't look at the shorter term stuff because that doesn't really indicate to us whether or not the company is trending in the right direction. So always start with the 5. And if the 5 shows you like a bunch of consolidation, which basically means the price hasn't changed that much, maybe you pull it out to the 10 to get a better look at it. And that's going to be your first step to tell you, do I take the next step, right? And the next step is when you start really looking at the income statements, the balance sheets, and the cash flow. And
Oh, let's go frozen over there. Everybody's frozen. Yeah, everybody's frozen. Did you hit that cord? No, that cord is.
you really like and you want to do a deeper dive, and go to their investment page, that'll be cool to do. But really what I'm hoping that you guys come back with, when you come back to the room, is I want each person individually to be able to say, you know what, here's one that after we leave this meeting, I think I want to go do some more research on, right? And then we can share those, and have a conversation about it, real quick conversation about it. And then after that, after we come back, I promised you last week that I was going to share it with you, what a trailing stop was. So we're going to talk about that real quick. It won't take that long. And then I'm going to end out with that website that I wanted to share with you. That I think I've shared with you before, but I really want to show you again because I think it's a dope site. So hopefully by now you've had a chance to write down all of those. I'm going to send you back to your breakout rooms. And I want to push Alex. I want to push you, Mo. I want to push you to try to lead some of the conversation about what you're looking at. Feel comfortable with not knowing the answer. Feel comfortable with saying I don't know what this means, because there's brothers in the room that can help you, and help you lead you in the right direction. So I want you guys to be sure that you do a lot of talking when you move into this next room. And push yourselves to learn. So sending you off to the breakout rooms. I'll give you a little bit more time than before. And then we'll come back and debrief those and go into those things that I told you about earlier.
Hey, quick question before we start. What's the website? What is it? Simplyalpha.com?
Seeking Alpha.
Simplyalpha.com. And so the pages that y'all were pulling up, that's free to use. Like you can just go to that website and pull up all of that.
Yeah.
Oh, cool. Seekingalpha.com. All right.
I can share my screen for this next go round. That's cool.
Yeah, guys, because I missed out the.
Yeah.
All right, so we're gonna do a little round robin. Not gonna get too deep like we did last time. If you had to choose one REIT you want to look into more, or you would suggest brothers in the room look into more, brothers in the room look into more. I'm going to tell you to share. I don't want people to be influenced. So put it in your mind right now. You're going to look into, or you're interested in looking into. And Vic, I'm asking you for your own, separate from your dad. So just be prepared for that. And so don't be influenced by what other people say. So whatever you're going to say, make sure you say that one. All right? All right, let's go. Actually, let's start with you.
Who?
Victor.
Oh.
Can't hear you. On mute. You're on mute.
I was actually looking at DLR before the call, so that's one that I'm already looking into. But I'm also interested in DRE now, just because it looked like they're having steady growth and they're doing pretty well for themselves. So I'm probably gonna look more into that after this.
All right, you done?
I ain't looking at nothing, man. No,
You hear?
actually,
Godard's here for the culture.
so actually, even though well point is not as clean as DRE, actually, I may actually look at that one. Or Cone, actually, I like infrastructure plays that are really, I'm a techie guy, so data centers and things like that kind of, once you get to a data center, you're like, oh, this is cool. So that one I might look at a little bit more.
All right, Ronnie.
Oh.
There it is. Brad.
Between KRC and DLR, because when I started looking at the revenue per, y'all should have never showed me that. How much a company makes off employee. Geez, I mean, I think what DLR only had KRC had 267 employees, but it was like $3.4 million
per employee.
Per employee.
Stupid.
Yeah, but these are REITs, man. All they're doing is pushing paper around.
Hey, I don't know. That's a lot of money.
Like out there building the buildings.
Hey, no buildwork.
Lawyers, man.
So O and KRC are your choices. All right. Nate, you're on mute. What's your choice?
So I was initially going to say DLR, but they stock price too high, man. It's $136. So I think I'll stick with KRC. But I am interested in the digital real estate, particularly with like cloud, space and things of that sort, which is kind of the new and up and coming wave of real estate investment. So,
hey Nate, are those two you like? Are they in the same sector? I mean, do they have the same focus, or are they different?
So KRC, no, that's purely office space. Next generation office space.
Yeah. Like we work type stuff.
Yeah.
Okay.
So, which is interesting because that's kind of what I'm looking into my company, where it's a remote setup where I can just plug and play and not worry about it. I've seen that around a lot,
Yeah.
So that's actually an interesting thing to play in terms of COVID-19. I'm actually getting rid of my office, so I'm going to be using the process, the asset itself. So I figure that's something where since I'm using the process and using it, I might as well invest in it. But I am interested in DLR, that space though.
Okay, cool. Thanks, man.
Mm-hmm.
That's actually good information right there. Just I hadn't thought about that, but it makes a lot of sense. As companies start to downsize but still need office space, one of those WeWork-esque type spaces.
Yep.
Good thought. Mia?
I couldn't pick between the two, but the two I'm probably gonna look more into is AMT and O.
DJ?
I chose AMT as well. All of those numbers look good. The actual stock price is a little high. But according to the dividend yield right now isn't a good time to buy anyway. So I'm hoping for a little drop, we can get in. And it's in the telecommunications sector, so that's always gonna be there.
If I can interject real quick, yeah. So while you're looking at the different real estate, so remember if you're looking at a company that's purely infrastructure based, where they're just looking for a company to rent or lease 15,000 square feet of space,
Yeah.
that might not be the market to go into because everyone right now is downsizing and downgrading.
Yeah.
The numbers look good right now, but it hasn't hit yet. Like my lease for my office, you can't get out of it basically, but I'm out of it this November. So you may not see a downturn in those type of real estate investment trust companies for another 5 to 6 months when people are able to get out their lease, even for another year. So that the bottom for them might be longer term. So just be careful with those type of companies as well.
Yeah, and a lot of the ones that are doing like the big box types of, 150,000, 300,000 square feet. You got like the Amazons. They're building their own spaces. They're not.
Yep.
You're not getting space from anybody. They're building their stuff, and it's all to be automated.
Yeah, building one in Suffolk.
Right now.
Here's the think about this too. They may be starting to transform it into indoor things like hydroponic growth or growing to repurpose it. So I'm also looking at stocks or companies who are dealing with stuff like that and also trying to create my own. So yeah, it's another thing to think about.
Looking at weed farms, man.
Not weed farms, not weed farms, kale, baby green lettuce. Dog, I'm taking a class every day.
They call those microgreens.
Right.
Yes, they do. What you know about that, man? You can make 10,000 a month off microgreens, bro. Trust me.
What about microgreens?
Wait,
these are,
and I'm not talking about a dime bag of weed either. Dang.
You talking about the whole?
Are we talking about cannabis stocks? Because I had interest in cannabis stocks. I just didn't want to sound like a pothead in my first.
No, you're fine. It's a safe space to be able to share your thoughts. But now that you've learned a little bit of the fundamental analysis, you can go look yourself. You know what I mean? And go see what you see. I will say that a lot of those weed stocks are still relatively new. So in terms of getting, it's a little bit of a, risk in terms of trying to read charts and stuff because there's none there, right? Or there's very little data, right?
Okay.
But I say that to say that sometimes you got to get into stuff early, right? Like, we're deviating from the conversation for a second, but so last week or 2 weeks ago, I bought Slack Technology, and Slack is really new, but I know a lot of people that use Slack, right, in their business space, and a lot of different businesses are using Slack. So their charts are only a year, maybe.
Yeah, about a year, right? Yeah, I think so.
About a year. So it's not a lot of information there, but for me, it was more of the belief that I thought that there was going to be, and their revenue has been growing like crazy every quarter, right? So so you got to pay attention to like other fundamentals. Be looking at their revenue stream and seeing if their revenue is like jumping up, and if it is, then it might be worth the risk. So why don't you just go next? What are you thinking about? What's your number one choice, Alex?
All right, so my number one choice, I was going to look at DRE. I don't mean to piggyback, but based on what I saw in the first breakout room, I like the trends. I forgot who took the lead on that one, but when we were looking at the charts, the cash flow, the balance sheet, the income statements, everything looked promising to the group. So I'm definitely going to take a longer look at that. And then secondarily, Cone, for the reason that was already stated, everything looked good when we went through the sheets and stuff. So I'm definitely going to take a closer look at that.
Nice. Kendall?
DRE, I'm not going to, like Alex said, same reasons. Everything's trending up. Looks good. Good stock price.
All right. Beautiful. Mo?
KRC. So when we were looking at it, they had a lot of positive signs. Also, we looked at their 5-year average, and it showed that it was kind of trending upward, but you couldn't really get a good overall perspective on it. So we extended it out to 10 years, and that's when we could really see a better, more upward trend that gave me a lot more confidence in deciding I want to go with that. Yeah. One thing that we did come across that was interesting, that a question to pose to you and to the group, either now or whenever we do questions about something that we saw with the dividends in there though.
And what did you see?
So in January, so quarter one, or I guess it'll be quarter three. First January 2017.
17.
In that quarter, they paid out dividends of $1.94, but every other year since, they've only paid out roughly about 50, close to 50 cents. So we're trying to understand why it would have spiked so high just for one quarter of time versus the rest of the years.
And was that year, was that like just a one-time thing, or was it consistently that price before and then it dropped?
One-time thing.
It was one.
Yeah, before and after. So that one quarter, they paid $1.94, and every other else was 40 something up through 50 cents. So I didn't even know why they did that.
Did you see anything with their revenue that same quarter?
The revenues was consistent going up the whole time.
So the only guess I have, and other brothers can chime in, the only guess I have is I wonder if there was a stock split or reverse split or something like that.
But if you split it, you're paying more money at $1.94, so it doesn't make sense to do that. Maybe if they're paying, you know what I mean? Yeah. Maybe it's a stock buyback, reverse buy or something like that.
They reverse it, yeah.
And that's a question I had this week, but I brought up in I was reading, just hearing a lot. People were saying that their stocks were split, so they were getting more. They had more of the stock, but the value wasn't there.
Yeah, the value,
right? The value goes down when you split it. I mean, it goes in half, right?
Yeah.
So it depends. If it's a 2-to-1, 3-to-1.
Right.
Okay. Yeah.
You'll have, have more shares, but it's still the same value at which you had it before. You just got more shares.
I don't know. It was just a curveball. I mean, because we've just been dealing with solid, shares, a share. But then you start splitting and all this. I'm like, hold on, what's going on with this?
But a split's a good thing. It can be a good thing, particularly if it regains the value of the stock right away.
And
now you
buy more.
Or you already have more. You have two, right? Or however many you have.
So. Yeah, the goal of the split is really to make it more affordable for people to go buy back in.
Okay.
Yep. Right. So if you got a stock, that's $150 or $100, and you want to actually get more people to look at it and invest in it, you do a split. Now it's $50 a share. But if you're in at 100, now you have 2 shares, so you're not losing anything.
I got you. Okay.
I'm curious about what the cash from investing section said in that same quarter. Maybe you might be able to see the stock buybacks there in that quarter. I'm also curious about the equity section. So you can just look at that for a second, and I'll go to James.
I'll look it up.
James, what was your pick?
I was just about to type it in the chat because I got to get ready to go. But I was interested in Cone as well. Something about being in IT with the data center situation was intriguing to me, in addition to what we investigated during our breakout session.
All right, and Brian.
I'm gonna look at O as well. My phone was that good.
I was like, is he sleeping?
I was trying to get my phone to work. It was kind of going in and out.
You can't see your eyes, your face. We only see you when you smile. So,
all right.
Okay. So O Realty. Okay, got it.
Yeah.
Cool. James, I'll share with you what we end with later on. But I know you say.
All right, man. Take care. Y'all have a good night.
Yeah, good night.
All right, man. Peace out, bro.
So thank you. So I got AMT, DLR, DRE, Cone, O, and KRC for brothers that are taking notes. And so going back to that original point, we started off with just paying like that. They're in your watch list, if you will. Just pay attention to those dividend yields and have some money ready to jump on something if the yield says it's time. What I'm curious about, and I'm not going to get answered today. Maybe I give this homework assignment to Godard. This is a perfect assignment for him. I'm curious about how you can set up, I don't know if it would be in Thinkorswim or what have you, what is there an alert that you can set up that would tell you when that dividend yield has gone over its like 4-year average. So just like the alerts that you get when the when the 200 the 50 or whatever, I wonder if you could set it up to where you could see an alert for the dividend yield, so you wouldn't have to get the check every day.
Yeah, I don't. Yeah, I'd have to look. I don't know if they, on the trading side, if they do the yield piece. But like, you can probably estimate a price based on what your price is now, and say, okay, if the yield is this amount and 4 years this amount, and okay, it's probably give or take a buck or so, if that.
Yeah, that makes sense.
I'd set an alert that way. Like if it crosses that price, then let me know.
Yeah.
But I'll take a look though.
Yeah. All right. So I'm gonna go over this really quick, and I'm gonna show you all the 2 websites real quick, and then I'm gonna give you your homework, and the night's gonna be over. Real quick, I ended last week. We were talking about ways to trade. We talked about trailing stops, and there was a couple of folks who didn't know what the trailing stops were. So I just want to go over again, how do you buy a stock? In general, there's others aside from the ones I'm going to share with you, but I'm just going to share 3 different ways to buy a stock. One way is a market order, right? Market order essentially is, I walked to the store, I saw a shirt for $19.99, I bought it for $19.99, right? That's in general what a market order is, and that's how a lot of people buy their stocks. They buy it at the price that they see it, and depending upon the bid-ask spread, which is a whole nother conversation, but depending upon the bid-ask spread, chances are you'll probably get it at that price, a little under that price, or maybe a little over that price if you buy it as a market purchase, right? So that's one. Number 2, which I rarely do. I rarely do market purchases. I did do a market purchase today, actually. I bought VHT, which is the Vanguard Health ETF. I've been watching it for weeks. It's been going up for weeks. It's been hitting the 52-week high every time I look at it. And I know that I can't pick a coronavirus winner. I don't know who's going to be the biotech company that's going to come up with the cure or whatever, but somebody is. And so I went with the EFT or ETF. I went with the ETF that's got all of them in it. And so I've been looking at VHT for a while, and it's one of those ones that have been going up consistently for a long time. But on Thursday, it went down. So I missed it on Thursday. So I went in, this morning, first thing this morning, and I did a market order just on the spot because it had gone down $10 from the day before. So I just bought it on the spot because I've been watching it climb the entire time. I didn't have time to mess around with it. So I just did a market order. So there are certain scenarios to which I'll do a market order if I just really want to buy it at the moment and don't want to think about it. There's usually a reason for it, but that's the market order. The limit order is basically you go into a mall, you see a shirt, you're like, I see it costs $19.99, but I don't want to pay that. I want to buy it for $15, right? So instead of going up to the cash register and trying to negotiate, you basically say, all right, whenever that thing turns $15, here's my money, here's my 15. Whenever it turns $15, buy it for me, right? And so that's what the limit order will do. You just set your price, and as soon as it hits that price, it's going to buy it at that price, right? Now, if it never hits that price, obviously you're never going to buy it at that price, right? The trailing stop is an interesting tool because it's in some ways it's kind of like trading options, because in trading options you already know what you could lose right off the bat. You know what the worst case scenario is off the bat, but you never know what the best case scenario is, right? And so with a trailing stop, I go into a store, I see a shirt for $20, right? And then I'm saying, all right, I'm gonna put a trailing stop on this of $1, which means if this price, stick with me for a second, if this price goes up by $1, buy it. So if it costs $20 and it goes up to $20.50, it's not gonna do anything. $20.75, it's not going to do anything. At $21, it would buy it. Question would be, well, why would you do that? That sounds stupid. Why would you pay $1 more for a stock when it costs 20 bucks? Well, what you're hoping for is it to go in the reverse. Because if the shirt was $20 or the stock was $20, it went down to 19, guess what? It's not buying it. If it goes down to 17, it's not buying it. If it goes down to 8, it's not buying it. Let's just say it goes all the way down to 8, and then it goes up to 9. Guess what? Your stock just went up $1, right? And it bought it at $9. And so now you bought that stock for $11 cheaper than you would have bought it otherwise. And so it'll follow, it's called a trailing stock because it basically will trail the price. It'll follow the price. And when it goes up the specified amount that you put in, that's when it'll execute. So when you put in that number, you already know the worst case scenario, right? If it goes up 20 cents and as soon as the market opens or whenever, if it goes up 20 cents in that second, then hey, that's just what it is, right? But what you're banking on and what you're hoping for, so if you would have had a trailing stop going on Thursday for a lot of stocks, you'd have been in a good spot because it would have just kept on following it down, 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 down. And then when it went up 20 cents, 25 cents, $1, whatever you put the trailing stop at, once it went up that amount, then it would have purchased it and then you would have got it at conceivably the best price possible, right? So that's what the trailing stop was for brothers that wanted to know last week. And then really quickly, I just want to share these two sites with you real quick. Number one, we talked about FinViz last week, right? But there was something I learned on FinViz that I didn't realize that I wanted to show you that I thought was really interesting. So did any of y'all play with FinViz this past week?
Not really.
Okay, none of y'all looked at it. So Seeking Alpha is great, but Seeking Alpha can't do everything, right? It can't do everything. So when we went to FinViz last week, you'll remember that we used the screener, right? We used the screener to look at the stocks. So one, of course, we see all this information here, like at a glance. So if you were to go to Seeking Alpha, these things might be on different pages, right? But some of these things are all right here for you, already spit out, right? And they even color coded it for you to give you some sense of if it's doing really well or not. So even from a visual standpoint, if you were just, eyeballing it visually from a color, you'd be like, man, this stock looks pretty good. And you know why it looks good? Because it is good. It's Facebook, right? But you might just stop there. And of course, your little candles are here and you can see the graph here. But what tripped me out about this page, if you go down, now you probably wouldn't have gone this far down, but it's got all this news here. You could read if you wanted to read it, but that's not what I wanted to show you. What I wanted to show you was down here, insider trading down here. And what you say, some of you like insider trading, isn't that illegal? Well, not this kind of insider trading. It's not illegal. This insider trading tells you, hey, these people right here work for the company, and certain people that work for the company, big people who work for the company, when they sell shares, everybody got to know. Everybody got to know. So I'll show you somebody that you're familiar with. Let's scroll down a little bit. Heard of this guy, Mark Zuckerberg, right? He's the guy that owns Facebook. So on
a ton of shares. Wow.
Check it out. So on November 1st, he sold $24 million worth of shares. And then November 4th, he sold $27 million worth of shares. On the 5th, he sold $24 million worth of shares. Then the next day, he sold $23 million worth of shares. And then the next day, he sold $22 million worth of shares. And then the next day, he sold another $22 million. Now, he sold a lot of shares.
But he probably owns like a couple $100 million though.
I know that. Like, don't get this money sounds like a lot to us, but he probably wanted to go buy a new car.
I mean, you can look at October. I mean, it was a whole 2 weeks of just selling.
Yeah.
Right. So that might not tell us a whole lot, but whatever was happening in Facebook during that time, if we saw this, we might say, man, Mark Zuckerberg was selling a lot of shares over the last couple of days. Now, what would be interesting if we saw Sheryl Sandberg, who's the chief operating officer, and David Fisher, who's the chief revenue officer, and David Weiner, the chief financial officer, if all of them were selling at the same time too,
something going on.
that might be something's going on.
Yeah.
Right? So this insider trading, I wouldn't use it as gospel, right? But this insider trading might give us a clue, right? A little hint that maybe something is going on that maybe might be a time based upon things that people are selling their stuff off.
Look at Peter Thiel right there. Everybody know who that is? Huh?
I don't see
Peter Thiel.
Right there, he got $11 million. The director. He's just a director of whatever.
Yeah, he was the first investor in Facebook.
Wow.
First 500,000 he got an outside investment was from his company.
Oh, this guy, Peter.
Yeah.
He's February. He got $11 million.
He's like an investor in like everything you could think of that's a big in Silicon Valley. He's part of it.
Oh, okay. Well, I learned something new.
What was the name again, Godard?
Peter Thiel.
Peter Thiel.
Actually, he writes books now too. So.
Which, side note, Godard sent out that crazy packet a while back on the EPI Investment Group that has literally every book known to man. So if you're a reader, like everything you can imagine is there.
Yeah, his net worth is $2.3 billion. 11 million ain't jack to him.
Yeah. So I want to show you that real quick, just as just that's interesting. Again,
might be a forced sale, like a structured selling for these guys.
Oh, I found out that KRC had they declared an extra dividend that year. That's why.
Oh, okay. All right. Thank you. Or it could be like, say, this Peter Thiel guy, right? Maybe it could be that, I don't know where he was. I lost him. Oh, there we go. Let's say he took in $11 million. Maybe he's got some other companies he's trying to launch, right? Mm-hmm. So maybe you start to do a little dive on Peter Thiel and see what he's invested in. You might be able to get in early on something based upon him jumping in $11 million on something, right? Mm-hmm. So again, this is not something you should be doing every day, but I just wanted to point it out to you to let you know that.
I'm actually surprised. I'm actually surprised how updated it is because that last one was like today or yesterday.
Yeah, it's right there, June 9th.
Yeah, nice to see all the millionaires in Facebook too, right? Crazy.
See how they're making a pretty penny. They're doing just fine, right? So I wanted to show you that. And then the other site we looked at before together, which is gurufocus.com. And I got to tell you guys, like pound for pound, this page right here is crazy. So basically it takes everything that we look at on Seeking Alpha and puts it on steroids, right? So going back, you don't have to know all these things, but it does a really good job of breaking it down. Here's their financial strength in general, right? Profitability rank. And then you're like, well, what do these numbers mean? I don't know what versus industry versus history. Well, if you just put your cursor right on it, it'll tell you ROE range past 10 years. It'll give you that. And you're like, all right, I still don't know what that means. But the fun part about it is if you click it, it'll take you to a page and literally will explain all the stuff to you. It'll explain everything that's there, right? Every single thing. And then as you scroll down, it'll give you some of the competitors right here, some other companies you could be looking at, their market cap, what their return on investment is. So on Seeking Alpha, we get 4 peers or 3 peers. Here, they're giving us like 10, right? So we got that. We got some charts here. They got some crazy math for you math nerds. But more importantly, like all this information is literally spelled out for you. And a lot of times, if I can find this particular sentence, so let's just say the return on investment percentage is calculated as net income attributable to common stakeholders, blah, 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 blah. Facebook's annualized net income attributable to common stakeholders for the quarter that ended in March 2020 was $19.6 million. Facebook's average total stockholders' equity over the quarter that ended was 103 million. Therefore, Facebook's annualized return on investment for the quarter that ended is 19%. So they literally just explain to you how they came up with that number, right? And there's a lot more stuff during the past 10 years. So so if you wanted to go to the balance sheet on Seeking Alpha and you didn't really understand everything you saw, you can click balance sheet here, and every single one of those sections, those non-highlighted sections, the non-bold sections are all right here, right? So if you want to do a deeper dive into anything we talked about Goodwill a couple weeks ago, right? If you want to click on Goodwill, again, it's going to tell you exactly what Goodwill is. It's going to tell you what their numbers are going to look like. It'll tell what
That's exactly what I said verbatim. It's an intangible. No,
but everything is here. So this is like, if Seeking Alpha was like the foundation, this is the deeper dive. You can get every single answer to every single thing right there on this Guru Focus website. So I just wanted to share that with you guys really quickly for those of you who are interested in digging a little bit deeper. I'm going to stop there because it's been a long night for a lot of you guys. We're on the West Coast, so, I'm just getting started. My kids are wide awake. It's only 8:30 here. But I did want to take a second to give you all the homework.
Hey, can I drop two things real quick before you do that?
Of course.
So one, in my group, we talked about this, but if you look at, when you're looking at your dividends, you want to watch the X dividend date, EX-dividend, because that's the date where you have to, if you are a shareholder as of that date, then you are entitled to the dividend, right? So X-dividend date is today. As long as you got your shares by today, you get the dividend. So it could be one day you held it or the whole quarter. So if you miss that, you're not going to get the dividend. So there was a question about that, I think, that we were talking about that. And the other one is that it's actually funny, that Robin Track site you showed us last week. So some of the groups, some of the option groups that I look at, like we're not using that to decide what to go against. So whatever they buy, we just go the opposite way. So it's actually,
hilarious. That's
actually working out pretty good. So Thursday was a great day.
I will say this.
Thursday was a piggy bank day, man. It was like just keep ching, 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 ching.
I will say this. I wanted to give Robin Hood their love because I threw them under the bus last week. Let me just show this real quick, just so we can be fair to Robin Hood. Check this out. I'm gonna share my screen just so we can be fair, so we're not one-sided over here. There was an article written.
Oh, about Robinhood. Was it today, Omar?
Right, a couple days ago.
Yeah.
Robinhood traders are betting against veteran billionaire investors like Warren Buffett and Carl Icahn, and they're winning.
They're winning.
So there's a whole article about how Robinhood investors, these young millennial folks, and a couple of y'all old dogs who are using Robinhood, are doing
this
the
is
exact.
Everybody was buying Carnival Cruise Lines 2 weeks ago.
Right. We're doing it, and the airline industries and the banks, some of the stuff that, and especially Hertz, right?
Rental car, yeah.
I definitely partook in everything you're talking about. When I said to you gentlemen, I've been winging this and doing it on my own, I was definitely a part of that group. I invested in the Carnival Cruise. I watched it daily. When it got up to 17, I sold. I cashed out. Same thing. I cashed out. I've been playing them dips.
Yeah. So not to get it twisted, you can make money day trading. People do it all the time. So we don't fault you for jumping on Hertz at 80 cents and selling it for $3. We're not mad.
I most certainly did. Took my winnings to Popeyes and had a great meal.
But hopefully, what we do want you to know is based upon what you did today, you would know that Hertz is a horrible investment.
It's not
No, that's and I can say that's what I got from that's the big lesson just in his first meeting. Like now I know at least like first glance, all right, I'm not just gonna throw money into a stock because the price is low and I can afford it. Like now I can actually put some homework behind it, and hopefully I'll be eating that Ruth's Chris and not just Popeyes with my earnings.
Right. That's actually a good segue. I'd like to give brothers a chance to say what they learned today and what they got out of the day before I give you your homework. So go ahead, Nate.
So I learned today that Beezus had a baby. Congrats. His
Yeah.
wife is in the hospital right now. He's still on the call. So good stuff, Beezus. Appreciate the dedication, bro.
Congrats, Unc. Congrats, Unc.
That's all I want to say. Give Beezus love.
Brandon said I need to get that money there.
Right.
This is investing.
I feel you.
All right. Well, what you get out of this week?
So one, are you talking me or my bad?
Let Mo
My bad.
first, and then you go after.
Go ahead, Mo.
I learned a stronger foundation in terms of REITs and different industries that they relate to, and just taking those types of stocks and applying the same types of principles that we use in other ways to come up with the portfolio strength and all that type of stuff. We're looking at trying to invest.
Nice. Go ahead, Nate.
One is it's just the increased trust in the group. I noticed a lot of people speaking more openly and things of that sort, which is good, which means you're learning. The other thing is, I think the process that we're going through works for all types of industries. So I didn't know how successful it'd be for REITs. It's technically the same things like an ETF or a normal company. So the process is solid and it works, and happy about it.
Anybody else?
I learned about the different types of REITs. I always just thought it was just like a rental property, so to speak. You got a digital space and things like that. So I need to look more into that, especially with this COVID stuff. And a lot of people are downsizing from brick and mortar like offices.
Yeah, I'll piggyback on that. I didn't even know that was even like a sector. You know what I mean? It's like opening up, you peel back one layer and like we're going to a whole different side of, I'm gonna put my $30 per share in one of these REITs next week. So I do. I learned something. I invested next week.
There you go. There you go. Anybody else? Vic, you learned something this week?
Just like learning about REITs in general, because I really didn't know anything about them before this week, and how the office spaces, how they're downsizing. I didn't even know that, so I'm probably gonna look into that too. That's pretty interesting to me.
Yeah, I'll piggyback off that as well, because I didn't know about the REIT stock either until the homework assignment this week. So it's pretty beneficial to say the least. So I appreciate that.
All right. Well, another week in the books, man. Again, when I started this 6 weeks ago, I was just planning on doing one day. I didn't know we were gonna be doing this every Friday. But I actually really, really enjoy it. And I just love the consistency that brothers have had. It's even gotten to the point, like James hit me up earlier today and told me he wasn't gonna be able to make it, but he came anyway. Mickey called me earlier and was like, man, I'm sorry I missed the class. So cats are even feeling accountable for not being able to show up, which is really great. So again, we want to see each other every single week. Every week we're here, we're going to learn more. So long as y'all are here, I'll be here, right? So we can continue to learn and grow together. I still want to put out the challenge to each and every one of you to bring a brother along, bring somebody with you next time, especially, in this case where I think there may be some cats that are intimidated, thinking that they're far behind and they're not going to be able to catch up. But I feel relatively confident with the way that we've been doing this for the last couple of weeks, with new folks coming. Like, I think everybody can catch on relatively quickly, and it's not going to be that difficult, especially with Mickey now posting the videos. So if anybody wanted to watch the video, they could, and it's there for them. So again, thanks to all of you guys. First homework assignment, we know is going to Alex. You're the only new person in the room, so you got a extra homework assignment, just like everybody else had the previous weeks. So your homework assignment is to go to the Facebook page. And anybody can do this, but this is always new people's homework. Go to the EPI Facebook page, share what you learned, tag somebody, and encourage them to come with you next week. And that's how we advertise, because we know how EPI is and the fear of missing out. So
I'm on it, big bro. I got you.
there you go. So that's your special homework assignment. For everybody else, I just dropped in the chat. I got to tell you, I learned a lot from YouTube, and I also learned a lot from Instagram too. So I just dropped in the chat a bunch of Instagram folks that I like to follow and I read up on. Wall Street Trapper, I had you guys watch his videos. One of the things I like about him is that he presents his information a very, 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 very simple way, in ways that you can understand it. Much like you, Alex, when you say you're the people's champ, the trap lawyer, right?
Trap lawyer.
He kind of goes after, he calls himself the Wall Street Trapper. So a lot of times he'll talk about selling stocks. He did 10 years in jail, but he talks about selling stocks much like, selling drugs. But obviously he's not selling drugs anymore. He's doing a really good job with the stock market. He's even picked up some NFL players that he's teaching classes to. So I would definitely highly suggest following him. He puts out good content. I got to say, personally, my favorite guy on here is the next guy, the Millennial Money Mentor, Latino cat. This dude's information is just good. Like, he explained the stuff that we talk about, he explains in detail. He'll always have like pages of swipes. So I guarantee you, if you go to his site and just swipe through, like, he's got a lot of like really just sound, solid, good information and understanding about how to understand stocks. So I think like he's probably my number one guy. This is not in order, but he's my number one guy. Personal finance, it's actually Club. It's not Clud. I don't know why I said that. But Personal Finance Club, he has really good visuals. A lot of stuff in there is like basic personal finance stuff, but then there's also his approach to investing. He's really an ETF investor, which if any brothers in the room don't know what ETFs are, we talked about those a couple weeks ago. Maybe that could be an extra homework assignment for you, what ETFs are. So look up ETFs. But he's a mainly ETF investor. I think 90% of his investments are in ETFs. He was also on this past week. He was also on Earn Your Leisure. Money Mondays. If you guys, Earn Your Leisure does Money Mondays every single Monday. I think it's at 5 o'clock my time, so it'll be 8 o'clock your time. They do it. Yes, baby. Yeah. When I'm done. I'm almost done. Okay.
Okay, and then we take the job money also.
Okay, baby. All right. All right. My son is hustling me for money. So there's that. So Money Mondays are really good. And those Earn Your Leisure dudes, the two black cats, they are really, really sharp. I would follow and watch them religiously. Right? So follow their Instagram, but they have a much bigger prominence. That's not the word I'm looking for, but YouTube is their space. So definitely go on YouTube, type in Earn Your Leisure, but watch Money Mondays. All of the previous ones are recorded. Wall Street Trapper has been on there. There's another guy, master investor, Ian Dunlap. But just the conversation is really good. And like some of the conversations that we have, they have those conversations about how to look at stocks, why you should invest, like all those kind of things. So they're really, really good. And then 11 Graphs is something that Godard shared a couple weeks ago. they're really like a quick snapshot, like kind of pique your interest kind of Instagram page, which I really like. Good visuals to really look at something really quickly. They might say something like, Home Depot, if you put $1,000 into Home Depot, how many shares would you get, and what would your dividend payout be? So they're really good to kind of follow, just like visually. There's not a ton of like deep information there, but it's like it's good like quick hits. And then the Market Hustle is similar to like kind of all of these. They're all like really kind of good visuals. I'd say 60% of the time their stuff is relatively interesting. But I would put all of these into your Instagram accounts if you have them, just because what I like is when I go through my Instagram, I like to be fed with something that's counter to watching somebody get killed. You know what I mean? And so I distinctly remember, when we were getting killed like crazy a couple years ago, like I literally was finding myself having like post-traumatic stress. I'd see cops on the street thinking I was going to get shot. And I knew that was coming from just seeing so much negative social media, right? And so what you feed yourself every day is important. So what I try to do with my Instagram page is I start to load it up with personal finance stuff, stock stuff, so I can be seeing that and be feeding myself with that stuff even when I'm not thinking about it. So I wanted to share all those with you guys. So the homework for this week. Next week, we're going to start looking at sectors. We're going to start looking at sectors. We just look at REITs this week. So next week, I want to look at the industrials sector, industrials. So go and find a stock or two in the industrial sector that you're interested in. Bring it to next week, and we'll do some fundamental analysis on it and see what the sector looks like as a whole. I'll tell you right up front, one of the ones I've been looking at for a while is waste management. I've been wanting to invest in waste management for a while because every Wednesday that green truck comes to my house and comes to get that garbage. So I don't know who yours might be. Maybe it's waste management. Maybe it's Republic Services or somebody. So industrials is what we're going to look at next week. So do some little research on that. Other than that, we're good, unless brothers got some questions or want to have investing after dark or whatever. But other than that, we're good for the week.
When's Big Bro? When's the next meet? It's next Friday.
It's every Friday, same bat time, same bat channel. That might actually date you, so I'll say that again. We meet every Friday at 9 p.m. Eastern Standard Time.
All right, I'm with you.
And it's the same. I'll tell you this: it's the same Zoom number, it's the same Zoom password until the end of this month because I'm using my work Zoom, and I quit my job, so my Zoom will change after that. So we'll figure that out when we'll cross that bridge when we get to it. But it's going to be the same number and same password for the foreseeable future.
Hey, I
got you.
I have a pro version too, in case you need it one of these days, man.
Oh yeah, word up. We'll cross over when they kick me.
Yeah, that's cool.
But yeah, so it's the same time every week, bruh. And like I said, your main job is to do that quick advertisement, but then most importantly, bring somebody with you next week.
I'm on it. I got you covered, Big Bro.
All right. Anybody else? All right.
Appreciate it.
See y'all next week.
Next week.
All right.
All right, bros.
Yeah.
All right.